Let's move now from one quarterly earnings to the other. We've got the management of SYRMA SGS joining in right now. J.S Gujral, the MD, joins us on the show. Mr. Gujral, great to have you on the show. Thank you so much for taking the time out. Extremely strong revenues, and I guess that's been led by the consumer segment, while the health and the IT segment are still seeing a fall. Tell us a little bit about what's impacting your revenue, and what is it that you plan to do for higher margins in the health business going forward?
Thank you for calling me to the earnings show. We have been witnessing strong revenues quarter on quarter, and with the corresponding quarter of the previous year, we have been growing at about 45-50% plus. And we expect this trend to continue. That's number one. The mix within the revenues by and large remains the same, except that the consumer segment is growing at a faster traction than the other segments. Automotive is stable at about 24-25%, industry at about 25-27%. It's the consumer sector which is growing at about 34%. It's accounting for 34% of our revenue. We expect the second half, as has been in the past, to be better than the first half. Typically, the first half accounts for about 45% of our total revenues, 40-45%. So based on this, we are on track to achieve what we had targeted for the current year. Now, on the margin profile, the way we look at is the margin increasing or declining in every segment which we service? And for us, the satisfying part is that the margins in the segments are either increasing or remaining stagnant, except in the consumer segment. Last year, the consumer segment was primarily based on our own design manufactured products. And this year, it has come into the OEM or build-to-print segment. And hence, in the consumer segment, if we compare with last quarter or quarter on previous quarters, the margins have shown a decline. That's because the nature of the business in the consumer sector has changed.
So I just wanted to come in here and talk a little bit about healthcare, which has been subdued in the past couple of quarters. When can we see an improvement?
This quarter, the healthcare compared to Q1 has shown almost 100% improvement. As I shared in my last call, the healthcare in the Q1 was only 15 crores. This year, it is twice or little more than that. And this trend, I think, will continue in the coming years. The margin improvement, which is a point of concern or point of concern for all, is going to be rectified in the coming quarters as we go more into exports. Exports currently account for about 27%. And in the last call, I had shared that we had onboarded some major global clients. Those clients will go on stream in Q1 of calendar 24 or Q4 of FY 23-24. So I expect the absolute figure of exports to go up reasonably in the coming quarters, though as a percentage of the sale, they would again be sub 30% simply because the domestic market is growing at a much faster pace.
You hope to get back to those 11 to 12% kind of range when it comes to your margins?
That's a long haul, not in the short run. But definitely, we are currently sitting at operating a bit of about 7%. I think in the coming quarters, we'll see an uptake on that. And with the operational efficiencies which will set in, for example, compared to the last year, my operating overheads have gone down by about 4%. And H1 being a subdued sort of half year compared to the H2, I expect this saving to get magnified in the coming quarters. The growth is very bullish. Our capex plans are on track. And I'm happy to share that we have signed up with one of the largest, if not the largest, IoT module manufacturer in the world. And we see significant business coming in from that. And this IoT module has an application across industry segments, whether it is in the energy metering, whether it's in telecom, whether it's in consumer. So we're very bullish and confident of growing at a pace higher than the industry. Working capital is under control. Margins are the only area which we have been sort of lagging in recovering. The other two legs which we had set out, they are on track. And so I expect in the coming quarters, this would also improve. And this will be aided by your design and engineering setup, which we commissioned in April of this year. Early days, it's into the incubation and it's started giving some revenues, but I expect it to significantly scale up in the coming quarters, more so in 24-25 FY.
All right, sir. Appreciate your time. So glad you could join us. Good luck for current quarters.